Hey everybody, welcome back to Zacks Research Desk. I'm Kevin Cook, a senior stock strategist for Zacks Investment Research. And here is my big topic today. This is going to be a cool and fun presentation, I hope, and that it provides some big signal for you and some high value in one of the areas that I talk about. I have 6 interwoven stories, not about the hyperscalers, mostly for the AI infrastructure build out. If you've seen my stuff before, you know I like to make a lot of connections, try and put together the pieces of the puzzle so that we can make good investments, hold on to them during the volatility, and proceed to capitalize on what I think is what I call the fifth industrial revolution and the greatest technological transformation that we are fortunate to live in. So let's jump in. I'll go pretty fast, give you a lot of resources, and I'll give you the slide deck at the end. All right, here are the 6 interwoven stories, just the headlines. The Mag 7 of AI infrastructure, the second derivative of the AI bubble, ode to Anthropic, a $30 trillion labor economics opportunity. We'll talk a little bit about SpaceX and TERAFAB, big news last week for both, and of course, physical AI and robotics. All right. So this is what I'm calling the Mag 7 of AI infrastructure. It's the players in private equity and the capital markets that want to be investors. So I'm trying to paint the picture that we're not dependent on what Google, Microsoft, um, Meta, and Amazon are doing with their CapEx budgets, because there's a lot of players behind the scenes who you don't hear about every day. And those 3 at the top are certainly important players. And I'll give more information on Apollo, Goldman, JP Morgan, and Sequoia. So I like to say these are certainly not sell-side shops selling you semi-stocks. Try to say that 7 times fast. They do deep research with deep benches, and then they do deep investment with 5 to 20-year time horizons. And so we hear that cumulative AI infrastructure CapEx is pushing to 7 trillion in the next 4 or 5 years, probably beyond that. I think that the numbers keep going up. Here is the slide that I use. This is from Marvell in June of 2025 at their AI summit, and this 1 trillion in CapEx, including Tesla, Stargate, OpenAI, xAI, Oracle, was projected to hit 1 trillion by 2028. So this is over a year old. We're already blowing through that. And at the time, both Citi and JP Morgan sort of had this 1 trillion target too, and maybe both. We're going to hit 1 trillion in 2027 at the pace we're going. So it's 750 billion this year, if you include Tesla and OpenAI, and it's going to blow through 1 trillion next year. So this was a slide I had Gemini make this for me based on a research document I had, just throwing some numbers out there. So the 5 trillion cumulative CapEx, that's a Goldman number that we're going to blow through that by 2030. So you're already looking at 7 trillion. That's what Brookfield says. We're going to talk about Brookfield. And then private. So we're looking at private equity, Blackstone, Apollo, and others. They have trillions under management. They're very interested in this space. As you know, not that hard to figure out if they've already been dabbling in data centers for at least 10 years, and they like the debt side of things as opposed to equity. So for some reason, Gemini threw a GDP comparison in here. We'll talk about that. I've talked about that before, where I think that what's going on going to accelerate GDP, not just the capex spending, which is already adding over a full point to GDP, but the cycle effects, the multipliers. All right, so here's a look at how private markets are taking center stage, sort of my Mag 7 of AI infrastructure. Infrastructure funds raised a record 220 billion in recent cycles, projected to expand from 1.7 trillion to 3 trillion by 2030. Obviously, as I said, they like the debt and the credit side, where they can, write off the interest. All right, so here are the big three Bs: BlackRock, Blackstone, and Brookfield. All doing things in their own way, but they're all competing to play in these markets. And, these are you don't hear about what they're doing every day. So that's why I wanted to highlight it. As a side note to the presentation here, obviously I'm breaking all the rules of having too many words on a slide, but we're not live. You've got the video. You can stop it anytime you want. If you want to read a slide, then you'll also get a copy of the slide deck, which has even more slides. Just something I'm building. All right, Blackstone is interesting here. I saw John Gray give a talk last September that really got me excited about their commitment to this. And they have a data center portfolio, with a subsidiary called QTS. But so that top line right there, their portfolio, including projects under construction, surged to a valuation of 185 billion, and they keep investing. And we just heard from John recently. I'll show you that. He was on CNBC. This is Blackstone's projection of the employment, the construction workers' employment that they're going to have just on their sites, just on QTS U.S. data center sites. This is a Blackstone slide. They're going to 3x in 2 years. This is the trajectory they're on. I don't know where they're at now, but this is a recent slide that by December, they'll have 40,000 construction workers employed at their various sites. So this was John Gray in September. I'll just give you the notes here from a talk he gave. It was their CIO symposium. So you can look that up and see the full video on YouTube. And he recognizes the power side and how important that is. Also interesting here, this line, investment memos now include an AI risk graph. What he meant was every investment analysis or proposal that comes across the desks of managers at Blackstone must include a paragraph about what is the AI risk for that company, public or private, meaning what could go wrong? How could they be disrupted? Because they recognize that the pace of disruption is fast here. And so they want to know, this investment has a good track record. It looks good now, but what if? And then he also added, if you have young college graduates, I would tell them power is the way to go. And we're obviously seeing that with electricians. They can double or triple their salary if they're willing to travel a lot to get data centers stood up. All right, so here was John Gray. This was very recent. This was in July. And And so look at that middle quote. People talk about what happened in the telecom boom and bust in the 90s. They talk about housing in 08, 09. He says, but in those cases, what we saw was massive speculative overbuilding and supply ran way ahead of demand. So what he sees now, he focuses on Anthropic, which I like to do too, because their revenue ramp is real. They've gone, just this year, you're talking about going from 10 billion to 50 billion, and it looks like they could close out the year at 100 billion in annual recurring revenue. Where is that coming from? From enterprise. Enterprise they love Claude. They're deploying it heavily, spending a lot on tokens, and letting their employees build and create. And so regardless of what you hear about the cheap Chinese models, enterprises in the US is not going to use them. They would much prefer Anthropic. So it's cool to see John Gray on top of that. BlackRock, they bought a unit called Global Infrastructure Partners not too long ago and raised more money. They made an acquisition of Align Data Centers for 40 billion, and they just closed a standalone mega fund with GIP at 25 billion to continue to invest. So, according to Brookfield and Goldman, funding the AI transition requires over 7 trillion in capital across compute, power grids, nuclear generation, and data centers. So, to them, this is reshaping institutional portfolios. Just like you could look at IT as a percentage of the S&P 500. Just in the past 15 years, it's gone from 20% to 35% of the S&P. Well, that's where the investment is going. That's where the wealth is being created, and that's not stopping anytime soon. I mean, by the time this decade's done, we could be talking IT is over 40% of the S&P. All right, this was from my blog in December when Brookfield went all in on data centers. They announced a new $100 billion AI infrastructure program. And the reason this was big signal to me is I already owned a little company called Bloom Energy, which makes solid oxide fuel cells. Probably heard of them. They made the news a little bit this year after the wunderkind from OpenAI, Leopold Aschenbrenner, was a big investor, and then he just blew up in July. But I bought Bloom Energy back in September in the 70s, around 70, and we just kept riding it and trading the swings all the way up because there were bears on Wall Street like Jeffries and BofA who had, $35 price targets and sell ratings when the sales were ramping. And one of my models, then this is before Brookfield became a partner. One of my models was, I just looked at Generac. Generac in the early 2020s basically doubled sales from 2 billion to 4 billion in a couple of years. And I thought, Bloom Energy is easily going to do that. So Brookfield sort of became a big brother to Bloom in October, I believe, with a $5 billion partnership. And they just upped that last month to 25 billion. So Brookfield is serious. They were my signal to stay long Bloom. They continue to be big signal for me to reinvest in Bloom. We just bought the lows around 160 on the July crash. So who is Brookfield? Well, many of you probably know Bruce Flatt, standing here with his buddy Howard Marks of Oaktree. These guys are buttoned down Wall Street financiers, right? They're not gamblers. So they know the credit and debt markets. They see where money's going, and that's why they want to be a part of this and continue to be so. This is from a Brookfield. They have a running blog. I think they call it Insights or something. You could just Google it. So this is um, looking at the constraints. Where are the constraints in this build out of power, land and permitting, interconnection, fiber, and this was just the recent post in May. Here's a quote from Mark Sorrell, global head of industrials at Goldman. We're experiencing unique parallel moments unfolding in real time, building the infrastructure required to advance AI while AI is rewriting the rules of the global economy. I think this is a really powerful quote for several reasons. First of all, he uses the word parallel, which takes me back to, what is Nvidia GPU processing? It's massively parallel architectures. That's how the gaming GPU became AI, because of parallel processing that the CPU couldn't do. And then this dynamic feedback loop between we're building the infrastructure to advance AI, and at the same time, AI is rewriting the rules of the global economy. Pretty cool quote. Here was my piece from March of 2017. I said, get your MPA in deep learning. It was when I really started to dive into Nvidia in late 2016, early 2017. And MPA stands for massively parallel architecture. How GPUs, chips stacked together by the thousands can create deep learning. And this was before the Transformer paper. The Transformer paper by Google didn't come out until June of 2017. And I didn't even know at the time that we'll come to it. Jensen had given the first DGX to Elon at OpenAI in 2016. So this is from my article, Big Happenings. When I did this, this all happened on the same 2 days. Einstein meets Watson. Einstein is Salesforce's AI, partnered with IBM Watson to do some cool stuff. And then at the same time, the same day, Nvidia built a supercomputer using 24 DGX-1 systems. So remember, they gave one to Elon. I'll fast forward to that. So here's the picture. Elon Musk just posted this yesterday at 3:27 on Sunday morning, August 9th. Elon just posted this picture from 10 years ago where Jensen drove to his office and gave him the first DGX box, which you can see there with 8 GPUs in it. And had to give it to him because he found out OpenAI was a nonprofit. So here's a quote from Alvin Fu. 10 years later, AI isn't just advancing, it's rewriting the rules of what's possible. Alvin Fu he's an ex-Googler, now a VC, and he's really on top of what's happening in Silicon Valley. Fast forward another decade, and we're not talking incremental. We're talking systems that make today's frontier models look like pocket calculators. The curve doesn't slow down, it steepens. And so that's why Elon says, imagine 10 years from now. 2026 already feels wild. 2036 is going to feel like science fiction we get to live in. I'm going to go back here. So in less than a year later, after Jensen realizes, okay, there is going to be demand for these DGX-1 systems, these 8 GPUs in a box, he puts together 24 of them for a supercomputer in Japan. And this is, now people are really paying attention, especially when you get a research institution, doing the work on deep learning and then publishing the results. Jensen at the time said, DGX-1 is like a time machine for AI researchers. I thought that was a cool quote. I always keep going back to it. I had put that in my article. All right. Nvidia Robotics. This is from my blog in October, why Nvidia owns the robotics R&D stack. And I'll show you how to find my blog later. I also got a cool, I just used Perplexity to make a dashboard looking at Lumentum and Coherent. I said I wasn't going to talk a lot about chip stocks today, but I'll just mention that Lumentum and Coherent, my favorite optical stocks that I talked about in February, in that presentation, how to buy and trade the photonic stack. I built a dashboard looking at their source for indium phosphide, which is extremely important right now. It's a bottleneck. China controls a lot of it. It's a big deal. We'll come back to NVIDIA robotics after we go to our second topic, the second derivative. So what could possibly go wrong with all this investment in hard assets and real estate? We just looked at Blackstone, Brookfield, BlackRock, Apollo is also in there, you know, investing heavily in the real estate and hard assets of building the AI data center infrastructure. What could possibly go wrong? Well, somebody wrote a blog I believe, oh yeah, it was published like July 2nd. He calls himself Groundbreaker, remains anonymous. He used to be from BOFA. He's a Wharton alum. So the second derivative, why no one understands the AI boom. And you can find that on Substack. So his tagline is, the market misremembers 2008. That same blind spot sits at the center of the AI boom. Now, we all know Michael Burry has a view and why he's bearish. I like this piece a lot better than what I hear from Burry. I mean, Burry's smart, but I really love this piece because I'm a big believer in what I call the Munger maxim. And by the Munger maxim, I mean Charlie Munger says your job as an investor is to know your opponent's arguments better than they do. Actually, he says that about all of life. You should know your adversary's arguments better than they do. So, and this piece is really well written. The second derivative, why no one understands the AI boom. I'll give you a few quotes from it. Oh, here's his key chart. Now, the second derivative, if you passed calculus, you know what that is. It's the rate of change. I did not pass calculus, so I didn't learn about this until I was on the floor of the CME around options traders, and then taking classes from Shelley Nattenberg, who wrote the Bible of option volatility and pricing, watching the options traders work their magic. I learned what delta was. Delta is the first derivative from the Black-Scholes model. It's basically the speed of the option. And gamma is the second derivative. It's the acceleration. So we can look at this, as a calculus problem. And that's what Groundbreaker does. He says it's not, he compares this to the 2008 real estate bubble because it wasn't that, housing prices peaked. It was the rate of change. And you have to be able to predict that. So he says that's the situation that the AI build out is in because it's so real estate heavy. And here are a couple of key quotes from him. The market is pricing AI as a technology cycle when its actual anatomy is that of a credit-driven real estate cycle. Says it another way. This is not a software business that happens to own servers. It is a real estate business that happens to compute. So definitely worth considering if you're an AI infrastructure bull like I am for the next 2 to 3 years. All right. I don't know why I put this here, but we're going to talk about SpaceX later, but just consider the fact that SpaceX paid $60 billion for Cursor. I'm like, I can't believe this didn't make more headlines. But, maybe everybody was so focused on SpaceX, the new IPO, that they missed this, or maybe they didn't, and that's why they were selling SpaceX, because they saw how much money Elon was going to spend. But why did Elon do it is the thing I want to look at. He explained it that it was a critical leap forward in autonomous superhuman software engineering and would be a vital pillar for SpaceX's long-term aerospace and compute system. We're going to get to that long-term aerospace and compute ecosystem. So let's dig a little deeper into the ROI and open source debates. We're going to hear from Clark Tang of Altimeter and Gavin Baker, infamous Wall Street investor that ran the Fidelity tech funds and then went VC. And key numbers here are 30 trillion and 9 times ROI. I'll try to explain those. We're going to talk about Ode Dwarkish. We may not have time to get to that, so just look up his recent, just find him on X. And he did an 11-minute video. He didn't say RSI specifically could drive up compute prices 10x in the title. He says, I think he just says why AI or something else. But I'm deriving that because he does talk about RSI, which is recursive self-improvement. So we're in an exponential right now with AI, but we haven't really hit the biggest inflection where recursive self-improvement comes into play. And hundreds and thousands of agents who can do coding and basically improve their own models, improve themselves, and build new models. That's RSI, and that could actually accelerate the demand for compute even more. So everybody's worried about, we got the Chinese models, Kimi 3. They're open source, they're cheaper, sometimes better, sometimes faster. That's going to destroy the AI trade. And David Zacks of the All-In gang doesn't agree, but that's a big question, right? When does Anthropic's revenue growth slow down? Enterprises stop paying for those expensive tokens. That could be an inflection point going the other way. I don't think it's going to happen. David Zacks, Clark Tang, Gavin Baker don't think it's going to happen. Dwarkish doesn't think it's going to happen. I listen to all these guys, and I try and distill what are they saying, because they're smarter than me. They're embedded in this. They talk to the model experts and the technology experts every day, so they know this stuff. Jensen has a great way of simplifying things. Jensen just says, AI is giving us more capabilities, which means people want to do more. There's more work to do, not less work to do. We're not gonna. We need more. Like, there could be a labor shortage because people can do more stuff, especially if you can learn how to deploy agents. That's going to drive up the demand for compute. That's going to create more productivity, and that is a virtuous spiral right there, going back to more capability, more compute. We're going to talk about SpaceX TERAFAB and what's going on in Texas. You can see stock ideas beyond semis. We won't get into those, but Bloom Energy, GE Vernova, Vertiv, CoreWeave. I even look at some of this, what I call the baby. So you've got the neo clouds like CoreWeave and Nebius. I look at what I call the baby neo clouds, Wi-Fi and Keel. So let's keep going here. All right, we're gonna exit out of the presentation for a moment because I want to show you a document I created. So what I did is Clark Tang, who's at Altimeter with Brad Gerstner, he's a partner analyst there. He did a post in July that was a little confusing. He started throwing around numbers like $30 trillion labor market and a 9 times return from AI, a 9x ROI. And here's the post. It's a little confusing. So I fed it into Gemini, and I said, let's really break this down, Gemini. So you can see it's a very long post. I just threw it into a Google Doc, and then I fed it into Gemini, along with Gavin Baker, who's he's posing the $1 trillion question: who's going to pay for all this AI spending? All right, so his post was a little shorter. It was also Gavin Baker is usually pretty clear and easy to understand. So Gemini spit it back out for me in language we could all understand. I'm going to just go over the highlights of this 30 trillion number and the 9x of ROI for now. Okay. So Clark Tang of Altimeter, they're looking at total global spend on knowledge work intelligence. That's 30 trillion. So what Tang suggests here is augmenting or unlocking 30 to 50% of that capacity creates a 10 to 15 trillion market opportunity. Simple math there. And what he means is that you're freeing up labor to do more work, and it will naturally demand more compute. And he says, okay, and then he suggests, what would be the bear case? Like what if he's wrong about this? So he runs through this math. He says there's 30 million software developers worldwide earning $100,000 a year. So that's a $3 trillion salary base. And so he wonders if AI tools increase GitHub commits by 3x, that generates 9 trillion in economic productivity. So he's looking at this through a productivity lens. What are the tools already doing for the people who do coding? How much better, faster, smarter, more productive are they getting? So he says, okay, could 3x. If there's 100 billion base of ARR currently, okay, so he's saying, just look at Anthropic and OpenAI, 100 billion in ARR. It's more, but he says even if 90% of those GitHub commits are useless slop, the remaining 10% still yields 900 billion in ROI on 100 billion spent. There's his 9x return. All right. Gavin Baker, he talks about a $25 trillion labor economics here. Okay. But his math comes out very similar, that we're going to have a surge in productivity and it's going to create more compute demand, not less. So a couple of good arguments to consider. So here's sort of the summary slide. Jensen talks about the flywheel of AI factories. And I showed you that before. More capabilities, more compute, more productivity in that flywheel. Clark Tang demonstrates that higher capabilities, agentic workflows, unlock step function revenue growth. And agentic AI requires longer inference loops, thus more compute, but delivers massive ROI, his 9x, even on extremely conservative assumptions that 90% of the coding is crap. All right. Gavin Baker, we'll sum it up here. Gavin Baker uses data from RAMP and A16Z. So RAMP does the books or helps with the books for a lot of Silicon Valley companies. So, they see the data, they can draw out conclusions, insights from that data. A16Z has a lot of companies in their portfolios. And so they see companies spending heavily on compute and doubling revenue because of it. So those companies are growing 2 times faster. The ones that spend heavily on compute are able to double their revenue. They just keep going. Compute spend is layering onto labor to multiply output rather than shrink teams. Okay, so that's the argument from those guys. I think we'll go to Ode now. So if you don't know what Ode is, I'm going to show you. Ode is a consulting arm based on Anthropic Claude models to deliver forward deployed engineers to help enterprise build what they want. And who's running it with them? Look at Blackstone is right in there. Blackstone has been at the lead of this. But look who else is in here. Apollo is a partner. Goldman is a partner. Sequoia is a partner. In the slide deck that you're going to get with this, I'm not going to talk a lot about Sequoia, um, but I'll have some good stuff in the slide deck about Sequoia and their involvement from the private side. So this is, this tells you, the demand is there. You've got Fortune 1000 companies going, we don't know what to do. We don't know where to start. No problem. We got you. Anthropic, Blackstone, Apollo, and Sequoia want to give them forward deployed engineers to get running. And so that's owed with Anthropic. All right, let's go back to the slide deck here and see some cool stuff from what's going on with SpaceX and TeraFab. Big week last week. So you had the SpaceX earnings call on the 4th, was that Tuesday? And Elon said something that really threw a lot of people off. They basically only have 1.4 gigawatts of operational compute. And he says they're going to deliver and stand up another 5 to 10 gigawatts in 2027. So I say by 2028. But Elon doubled down on the call when I think Adam Jonas asked him, wait, are you really saying you're going to put up another 5 to 10 gigawatts? And Elon said, yeah, probably more than that. He started throwing around numbers like 15 to 20. So that's Elon, right? I mean, he's a big talker, but he has delivered on some pretty cool stuff. Starlink, SpaceX rockets, and building. I mean, he's built data centers faster than anyone. So while some people take, 18 months, 2 years, he's built like 100 megawatt, several hundred megawatt data centers in 3 months. So he does deliver. So we'll look at the Texas projects. So basically, can he really come up with another 7 gigawatts of terrestrial capacity? And this is the key. Like SpaceX has big dreams about orbital compute, but before Elon's mega vision of orbital compute, he knows he needs to do stuff on the ground. So this was the SpaceX call in 8.4. 2 days later, Thursday, August 6th, they unveil TeraFab and lot more details about TeraFab. But let's check in with the governor of Texas, Greg Abbott. He's the new sheriff in town, and he's patting himself on the back here, saying every day they're complying with my guidelines and guardrails. They must bring their own money, bring their own power, reuse their own water, reduce the cost of electricity, not be able to run neighborhoods, and support the stability and reliability of the Texas power grid. Hey, reasonable stuff. Elon's smart enough to realize he's got to, work with this guy and make him happy. So while my little gem Bloom Energy has run into hiccups in New Mexico because they can deploy these solid oxide fuel cells that turn natural gas into electricity without combustion, but they can't get a pipeline going. And New Mexico is not being cooperative in helping with natural gas pipelines. So here was there was a town meeting sometime last week, and Riley Treadle, I didn't know who that was, but apparently he oversees energy and data center development for SpaceX. I'm following him now on X. He says we're bringing our own power. He's speaking to an audience of one here, which is Greg Abbott. We're going to be building natural gas. read this. This quote is important at this one at the bottom. We're going to be building natural gas fired power plants, and we're going to be building very large battery arrays in order to store energy. When I saw that last week, I went out and bought Fluence Energy. Fluence Energy, FLNC, is the brainchild of Siemens and AES, two, mega industrial power related companies, technology and power. And Fluence has been on a wild ride. Like in May, it went from like $12 to $28 on some good news, but they're having execution problems. So the stock came all the way back down to 13 and lower. And I thought, you know what? I'm going to take a shot at it here because I have to believe that Siemens and AES could learn to execute here. We will see. I started a small position. But BESS stands for Battery Energy Storage Systems. So if you ever see BESS, BESS, Battery Energy Storage Systems, that's what megapacks are. That's what Tesla megapacks are. So that's the Elon model, right? That's the Tesla SpaceX model is BESS with megapacks because you can produce energy, but then you want to be able to store it and have it available. Not tax the grid and not tax your data center workloads. You can't interrupt the data center workload with a power outage or you lose everything. All right, let's talk about TERAFAB. So on August 6th, Elon unveils, and here somebody said, well, this guy, I don't know who he is, Nick Cruz Patain, but Elon retweeted him. So TERAFAB compared to the Pentagon, the Apple spaceship in Cupertino, and the Mall of America. Look how massive, 100 million square feet. There's the Pentagon right here. That's how tiny the Pentagon will be. And then Elon retweets it and says, TERAFAB will be 50 times the size of the Pentagon. Okay, now we're back to the big dreamer again. Can he execute on this? All right, so I think that's the end of my slide deck, or what we're going to look at today. The next 15 slides or so look at Apollo, Sequoia, what JP Morgan, Goldman Sachs are doing as part of the Mag 7. All right, so I want to show you a couple things on my blog because I've been tracking what Elon's up to, obviously. And, what's the delta between his huge vision and his ability to execute on any kind of timeline that's reasonable for investors. So this was a blog thread I started in November after Elon had just appeared in Washington and sat on stage with Jensen and some officials from the U.S. Saudi Investment Forum and said, we're going to space with data centers. So he said something like he could put 300 gigawatts of compute into space every year. I mean, we don't have 300 gigawatts of terrestrial compute. I don't even know if we have 200. I don't think we have 100. So Elon's, he's put over 5,000 satellites in orbit. He probably has a vision of how he could put 300 gigawatts of compute into space every year. So that was his big vision in November. And now he's building the infrastructure with the TERAFAB, which is a place to build the chips and the compute and have it ready. Let's see. Yeah, so let's just go to the August 6th party. There's a look at that beauty. This is obviously an image, but this is the thing that's supposed to be 50 times bigger than the Pentagon. And so you can go, so they have a running page. It's spacex.com /updates, hashtag TERAFAB. So August 6th, breaking ground on TERAFAB in Texas. It's a pretty big deal. Here's a key graphic. He says available new compute is what in the mid 30s or something for gigawatts. He wants to provide a terawatt of compute. That's again pretty lofty. It's just like putting 300 gigawatts in space every year. So this is fun to look over. To me, even if TERAFAB is a too lofty of a dream, like 50 times bigger than the Pentagon, and he thinks he's going to produce that much compute. It's getting there. It's like just scale it back. Forget TERAFAB for a second. Just listen to him saying he's going to add 5 to 10 gigawatts of compute in the next 18 months. Even that seems hard to do. Semi-Analysis put out a blog post or a research note saying they think he could do it. Well, it'll be interesting. So let me see if I had some other cool graphics here I wanted to show you. We looked at that. We talked about Greg. So here's the summary. In Grimes County, should create 3,000 new jobs with an initial phase costing $16.8 billion. So this will be the real test for SpaceX. And I don't know if I want to be an investor in SpaceX stock, but I know I want to be an investor around the periphery of what Elon's doing, because in some ways he's like a one-man China. He's taking on bigger scale projects than the rest of the United States. And it's inspiring. It's sort of, aim for the stars and you might hit the moon. But I think it will attract more investment, especially since he does have a track record of achieving incredible things, even though some of his timelines have been blown out. We looked at that. Elon tweeted, TERAFAB, Texas will be the largest and most valuable building on Earth by far, and it will be stunningly beautiful. Of course, Elon. All right, what else did I want to show you? Okay, so we got to talk. So I want to do the latest in robotics developments. So if you come to my blog, I want to show you that this dashboard I made. So I made this with Perplexity. It was pretty cool. It took Perplexity about a half hour to make this, but I fed it a lot of data. So it's a indium phosphide supply chain tracker, and comparing Coherent and Lumentum, my two favorite photonic stocks, on where they source their INP and how reliable it is. And so I've got an overview, a fab map, timelines going out to 2028, substrates, and statements from management. So if you want to get that, just come to my blog here at AI Stock Investing in School. But let's talk robotics real quick, because some cool things happened just this morning. I already showed you some stuff happening in robotics. Actually, first I got to show you what Elon did in July. So I click on the robotics tab, and if you scroll down there's some good stuff in here. You got to understand physical AI. Is just this whole new realm that will demand more compute too. This is what I've been saying ever since 2024, is people have no idea how much compute is going to be required to do physical AI. Not just self-driving cars, not just humanoid robots, but all kinds of machines, billions of machines that want to operate autonomously at the edge need to have, super safe computer vision and super safe mobility, right, around humans. So we need what are called world models to simulate and train them, because we can't train the machines and the models in everyday life all the time. So you want to do is you want to simulate. So robotics geniuses like Fei-Fei Li, you can just come on here and search her. If you just search Fei-Fei, you'll find a lot of stuff from her. I just posted something by her this morning where she gave a talk last week. All right, so what am I looking for here? Oh, Nvidia owns the robotics R&D stack. So scroll down here because here it is. So at the mid-July, like three big things happened in 1 week for Nvidia. They were in Japan. They're building Cosmos think of it as world models to create synthetic data and simulated training for robotics and other machines. Then in Japan, they launched the world's first national AI infrastructure. Okay. So this is all happening like the week of July 15th. Nvidia introduces new Jetson Thor computers to advance mainstream robotics and edge AI. Nvidia new agent toolkits for Omniverse libraries. Remember, CUDA works because Compute Unified Device Architecture is not just the software, but it's a library of libraries that developers can pull off the shelf and say, I want to build this. Let me start with this tool. And then SIGGRAPH is a big computer vision conference that was in late July. So you can find all those links there. But let's just look at, so that's, NVIDIA continues to, be the stack that everybody wants to build on, and they keep pushing the frontier. So let's look at, NXP wants to buy AMBA. That's cool. NXP does a lot of automotive. They want to have AMBA computer vision for stuff they're doing in cars. All right. I may have just frozen the blog here. So I'll just tell you the two big things that happened this morning. Taiwan Semiconductor and Sony announced that they are going to build a very large facility. I think they're going to build it in Japan for computer vision, because they see that, we need better computer vision for cars, for robots, for other autonomous machines. And then what was the other news here? Let's see. NXP AMBA. Oh, I must have put it in another blog. Yeah, I did. The other big story. Oh, ARM Holdings. I got to find this because this guy is super smart. So I'm just going to search up here. Actually, I'll search my most recent posts. This is a big thing that ties all this together on the economics. Okay, here it is. This is the post I made this morning. So his name is Drew Henry. He's an EVP of ARM's Physical AI unit. All right, I'll just give you the headline. Physical AI. Okay, this is the opportunity for physical AI. He says you've got a global GDP that's 115 trillion. 70 trillion of that is physical, manufacturing, transportation, construction, mining, agriculture. Makes sense. Only 40 trillion is digital. But he says the physical side runs on 1/10 of the compute that the digital side gets. Think about that. And this is where we're going with physical AI and the compute demand. Right now, Anthropic, OpenAI, those types of models are consuming 90% of the compute. But to have billions of autonomous machines operating at the edge, we need more compute for physical AI. So, so I just found this talk. This is Austin Lyons. You can find him. Let's see. He goes by Austin Semis on X. He's a semiconductor analyst, former engineer, I believe, and he does a lot of cool work. He's doing a lot of cool interviews. He interviewed somebody from Qualcomm last week. Oh no, from Global Foundries. Global Foundries is bigger in photonics than I had any idea. And so find Austin Semis, find this. He works with Ben Bajarin at a semiconductor research house called Creative Strategies. So that's why this link on X is from Creative Strat. So if you just go to Creative Strat or Austin Semis, you'll be able to find this interview with the guy from ARM talking about physical AI and what the amount of compute that's going to be required to pull this off. All right, that I've definitely exceeded my time for today, but I hope I've made some connections here for you and you found something useful. And we'll make the slide deck available. Come over and find me on the blog and say hello, and we'll talk to you next time.